Hello, Warriors. How are you? Hope everyone had a good weekend. Arena, Shahab, Brock, Buddy, Sa, Didier, everybody. Let's have a great week. So I've been thinking about a narrative over the weekend. You guys interested? This is what I think. I keep hearing on financial Twitter and everywhere else that people are going to wait until after the election to get short the market. Hearing that a lot. It almost sounds too pat for me when everyone's waiting for the same time frame to act. Similar to, about 3 weeks ago when everyone was looking to sell the dollar because the Fed was going to come in and with guns blazing, and actually everything sold off. Metals, dollar rallied, and S&P sold off. So thinking about this, we're approaching the 78.6 level in the S&P. We're not that far away from the same fib retrace in NASDAQ. NASDAQ would be at 12,000, a little over 12,000. So, we're 78.6 comes in at 12,008. So I'm contending that there's going to be a top. We're almost at levels where I'm going to start probing. I can't do it yet because of momentum, right? Still pretty strong getting these 80 readings. I need readings under 70, which, I'm getting on some short term, but this is just, can't see my screen? How about now? Yes? Okay. All right. So as you can see, the S&P is almost there. There you go. 78.6, 35.07. The high today so far has been 35.02. Yeah, that's right. The RSI is confirming. So I can't do anything. I'll have to do a little work. The 15-minute isn't. The 2 hour isn't. So a lot of momentum going into this peak, but I think we're going to get one between here and 35.20. Part of that narrative would be I can see why people think we're going to have a new low in the dollar. Look at the 4 hour, that this was just an ABC, and we're headed to new lows. If we head to new lows, it's all wet, and S&P should be able to attend new highs, but it's my contention that we're going to hold between. We've already tested, haven't quite tested the 61.8 level between here and 78.6. I think the dollar will dig in its heels, and that we could have one more of these from here. Also, when that occurs, the preferred short for me, not at this time because we're not there yet, is going to be cable over euro. Euro still has a little stronger structure, as you can see here, compared to the pound, not taking out 70. And also because of my bias in euro pound, I'm looking for buys here sometime this week. Yeah, I like it, but buy time. And the other part of the equation is metals. And as you can see, silver's outperforming gold today. I thought we could make a move towards 26. Maybe not. We'll see if we could get up there. But silver is going to be the preferred short over gold because I'm thinking there's one more wave in the gold silver ratio, that this is just correcting. This was the first bounce, and we're going to put in a low here and move to 90. which is going to make silver the preferred short while this is going up. Also, copper, which is making new highs. I think we'll get some type of divergent high in copper as well. I know I have it here. Here it is. So copper on the verge of making new highs without confirmation. Could be a 3 driver coming up. And that's my narrative. That's what I'm looking for. 132 is what a target I've been talking about for a while. 131, 132. So that's my plan. Okay. And I planned it this weekend. I haven't executed any part of this narrative yet. In fact, I think tomorrow might be the day or the next day for it's interesting in Euro and Dixie. We have inside day. Today's range. We've held Friday's low, which was 93.01. Last night's low, 93.01. So what I'd like to see for tomorrow would be to take this out, maybe trade towards 260 and then reverse. So that's what I'm looking to do this week. Haven't done anything new today or last night. Any questions? And I could be all wet. So really this is dependent upon the dollar not washing out to new lows, but putting in a higher low. Okay. Above this. Well, what I just said, Shahab, that silver would be the preferred short over gold. I'm not saying gold won't work, but the gold silver ratio. Yeah, well, I'm not buying it today either. And if you ask me what I had the most conviction on out of all of those, I'd probably say stock indexes. No, I'm sorry, I don't have an aluminum chart. I have some aluminum foil in the pantry, but I don't think I've ever traded aluminum in my career, my short career. Okay, so see what Blake is thinking in here and the rest of the team. And be interested in perusing what our team is saying.
Well, good morning, Coach.
Hi, buddy.
It's slow. I mean, when I get up in the morning, usually the first thing that I do after I get the computer up and running, get my coffee, sit down, I start looking at charts and I start updating Forex analytics. So when you're looking at those, you're looking at the Forex analytics platform. If you click over there where it says live stream to the right.
Oh yeah,
Dale.
I got it.
Oh yeah, there you go. Yeah, if you click live stream, usually there's a bunch of updates like you'll see harmonic updates that's from Andre, but you'll usually see basic analysis updates right around this time. Because I'm usually flipping through charts and updating, hey, we just stalled at the 618, or hey, we just hit a trend line, we might bounce here, things like that. Yeah, when I get up in the morning and there's nothing to update, and I was telling the people, all the traders in the chat room, I'm like, I'm kind of at a loss here, and Amanda's like, yeah, there's been no movement, and yes, it is a holiday. It's Columbus Day.
Columbus Day.
Columbus Day?
Yeah.
Yeah.
Columbus Day, yeah.
Columbus Day. It's a bank holiday. The equity markets will be open, but it's going to be slow. And obviously, if the FX is telling us anything about what's going to be happening, it's telling us that it's going to be slow. So I don't know. Hold on really quick. Were you done, or was I just jumping in prematurely?
No, I was done.
Okay. I wasn't sure if you were like, hey, I'm going to go do whatever. I thought you were calling for me and I wasn't really too sure. So
yeah.
So here,
I'm
here I am.
okay.
Here I am. We're going to look through the charts, but you'd said something. You were looking for a euro sterling long.
Yeah.
Why? I'm just asking you why.
Because I think if there's one more bounce in the dollar, that cable's going to underperform euro.
Okay. All
That's
right. Well,
that's the main reason.
I'm asking because I'm short. So,
Okay.
and if you look at the price action on Friday, obviously the cable was a little stronger on Friday,
Yeah.
but it's,
Yeah.
it's
It's
Friday.
rolling over.
Yeah, we had little false breakouts here. This is an important week for the sterling or for the pound. It's we have European Council meetings Thursday and Friday.
Okay.
So there's going to be a push to get some negotiations kind of buttoned up ahead of that, and we might see some.
Yeah, we should take out that low, Blake. That low that you have the bottom of the triangle at. Should take
Yeah.
that out. It was a confirmed low. A little more to your left.
This one?
No, it's in the one more. Go left, just where right there. I think
Oh
we'll
yeah.
take
Okay.
that low out. But if you look at the C to D, that was pretty directional. Kind of, I don't know, Elliot, impulsive. And this action, since that high at D, looks like it's consolidating. So I don't know. I'm wrong under the C low, but I'm looking to buy it somewhere.
Got it. Okay. All right.
Okay.
I'm
But there could be another 50, 80 pips in it to the downside first.
yeah, and we're dealing with Brexit, and we'll see. We'll see. I mean, I took some sterling longs, not just against the euro, but against other currencies over the weekend. And
Yeah.
I mean, I'm basically flat. It's not nothing exciting right now, but it's more for a longer term play. I'm thinking that that these Brexit negotiations are going to, it's kind of like
Lapse.
stimulus.
Oh, yeah.
And
Oh, yeah.
stimulus is the same thing. Look, stimulus is going to get done. There's, it's going to get done, whether it's a few weeks from now or it's, after the election.
Yeah.
Some more stimulus is coming. And sorry, it's Monday morning. I actually went to bed like an hour early last night. Just try to get some extra sleep. So it's the same thing what Stelios always says about Brexit, that a deal's probably going to get done. I mean, it's in everyone's best interest to get something done. But as we get really closer to like some self-imposed deadlines, it's there's a good chance that we're going to get some sort of Brexit deal. It's going to come through, and then do you want some pound or sterling longs going into that? And I would think yes, but the timing's always tricky, and I don't know how long I'm going to stay in my cable positions. I have no idea. So
I thought we could get to about 61.8 in cable of the decline. I think it's around 132.
Yeah, well, one thing about this, the pound, and I need to point out is we have this inverted head and shoulder pattern. We're above 130 and we're holding above it.
Yeah.
So, and this is something that I pointed out on the blog a couple of days ago. I believe it was on Thursday when we were down below here. I think the market could be caught wrong-footed, and really, if you look at this daily chart, let's kind of zoom out a little bit. This is the matter of fact, I guess we got to go to a weekly chart. If you go to the weekly chart in the sterling, I mean, this is a descending wedge, right?
Oh, see,
big time.
I'm not bearish cable anymore.
Well, the thing is if we break 134 now, I know that's a long ways away. You can look at the sterling and go, well, we're at 130, Blake, right? So if we get above 134, which would break
Yeah,
all this resistance, that would be mega bullish. I mean,
real
we could be
bullish.
literally trading up at 145
Yeah,
within weeks. You know,
that's
it'd
a nice
be,
formation.
yeah, I mean, it could be a massive squeeze, but that's not for now, and it's neither here nor there at this moment. But it's something that,
I like it.
we pay
That's a,
attention to.
yeah, it's a telescopic view.
Yeah, I mean, you think about, all right, well, if the bullish case really starts building in the pound, um, is there room for us to really move? And there is, and that's why I want to make sure everybody sees that, because if a Brexit deal does happen and people start getting really bullish, the pound, if you think about how far it could actually move, because you remember, I mean, I'd like to say I'd remember, but during this Brexit move, I was actually in Hawaii the
Nice.
night that Brexit. Well, yeah, that sucked. I actually took a flight on the night of Brexit, because I'm like, it ain't happening. So yeah, and by the time I landed, the move was over. So if we unwind some of this,
Yeah, yeah.
which we could, and I'm actually talking about over here. It's not there. It's over here. We can unwind some of this and be back in the mid 40s, 140. I want to be around for it. So anyway, I think I've bored you guys enough about the sterling.
No,
And
are you kidding me? You showed views that I hadn't seen. That's the beauty of what we do here, Blake, is, even for free, is that we're all providing our views, and, we all see different things, and it's edifying to see, different views, different perspectives. I didn't see that on the weekly, but now I see it. And so it's not boring. It can save people a lot of money by recognizing something they didn't find on their own, and help them make money by learning how to change their mind.
yeah, well,
That's not boring.
yeah, we'll see. I mean, I'm trying not to make predictions, because especially in situations like this, it's like, you know,
Yeah,
you don't know
crapshoot.
what's going to happen.
Yeah.
You're not there. None of us are. So you just got to look at the technicals. And like right now, I know that we closed above 130 and we're holding
Yeah.
above 130.
Yeah.
So therefore, I'm long some sterling against a few things. So as long as we stay above 130, why won't I stay long? I mean,
Right.
I have to put myself in the shoes of somebody who's short right now.
Yeah.
If
I
you're
wouldn't want to
short,
be.
yeah, you're looking at this going, man, I don't like being short right now, because not only did we break above this 130, but we're holding above it. And
Yeah.
the longer we sit up here, the more nervous shorts are going to be. And that keeps me in the, in the power position right now.
Yeah. I like where
If
your
we,
blue horizontal and trend line intersect up there above where you are. That's
yeah,
a little under
like right,
32.
but
Yeah.
yeah, we start getting up here, and then it starts to get really scary
You'll be
for a
gone
guy
up
who's
there.
short. Yeah, I'll probably be out by then, but you're right. You know me pretty well. But I mean, if you look at like what we can accomplish here on an inverted head and shoulder pattern, it could take us up towards 132. That would be the target of this move. So anyway, just some food for thought. Let's go through the bias chart, and let's go ahead and get all your key levels for today. And I'm going to actually tighten up the levels today, because I'm not expecting a huge amount of volatility. I'm not saying that we can't get it, but that's not what I'm looking for today. So the euro, I think, is still in an ascending wedge. We kind of had a little false breakdown down there, but support today is going to be 117.80. You can see right here.
Yeah.
Right through there. You see it?
Yeah.
117.80. That's support. Resistance. Les resistance. It's going to be up here. 118. I would say 118.30. I'm going to give it to these highs, even though we can get a little higher than that. But 118.30. And look, if you guys want to, if you're like, okay, I'm looking for something to do today, well, fine. Short the euro up here, you know, at 118.30, or get long down here at 117.80. But while you're in the middle, you know, is there a lot to do at this very moment? Probably not. You know, you can flip a coin if you want, but you know, take a pop shot at it where there's better risk reward levels on these charts. Down here, get long. Up here, get short. Put in a tight stop and go for it. You know, if you take a loss, so be it. Move along. Here's your cable. So support obviously now is 130, and I'd give it a little lower than that, like the bottom of the support zone, which will be 129.80. Resistance is a 50% retracement, comes in at 130.78. So 130.80. Oh, I need to do this. So, you know, again, going back to the euro, I'm going to put us in range. Pound is believe it or not, it's still in range. We're just in range for pretty much everything. Aussie. Okay. I'm going to keep us bearish. That is only because we are below this channel. Well, see the pink line here. While we're below, in this 618 right here, while we're below that trend line, I have to remain more of a bearish stance. The 618 retracement comes in at 72.50. Support. I mean, it's at 72 cents, but let's just say we get below 72 cents. Probably right there. See those spike highs? See those spike highs? See that spike low? 71.70. Okay, so 0.7170, 72. Okay. Kiwi. So this sucks if you're long, because you know we closed the weekend back above this resistance. You know, how many people like went home long the Kiwi over the weekend saying there's a breakout, I'm long. And so now if you're long from Friday, you're probably like, oh crap. So now resistance is 66.75, and support's going to be back down here. I guess, you know what? This inverted head and shoulder pattern played out, didn't it?
Interesting.
It sure did, huh?
Yeah.
Coach?
Yeah,
It sure did. So now that we've completed that, 66.75. It's actually 60. I just want to write 66.70. I'm going to leave us
and
in
if
range.
someday, Blake, we do get a correction in risk,
Yeah.
would you say Kiwi Aussie more vulnerable than euro or pound?
100%.
And
Always.
okay.
Always. The only thing that's going to ever change my mind, I'm going to tell you guys right now. Dale, do you know what the game-changing event for me is?
Something with China.
Yeah, actually.
Okay. Trump making friends
Has
with
nothing to
Xi
do with
again.
Trump. Nothing to
Okay.
do with Trump.
China. Okay. A recovery in China.
No. The Three Gorges Dam, if that ever
Oh my
breaks,
God, that. Oh,
now I'm on a hope that never happens, because we
yeah.
will lose millions of lives if that happens. The world will. I mean, China will lose millions of people. But if that ever happens, I'm going to drop everything. And I know everybody will be like, oh my God, the market's going to, fall. I'm going to get long Aussies and Kiwis, because that's going to be a massive inflationary event,
Yeah.
because China's going to have to turn around and buy a lot of
Everything.
everything to rebuild. And I think the Aussie and the Kiwi will outperform no matter what. So that's my only game changing event for me. So,
Okay.
but until
Interesting. Yeah. I never
yeah,
thought of it.
unless
I know it's been in the news a little bit lately.
yeah, in the last
People
few
worried
months,
about it.
yeah, people worry about it, and I do. It's one of those, like,
Be like Hoover Dam going
it's an
or
inflationary black swan event.
okay.
That, yeah, you guys really want to see inflation? If that happens, we will get inflation globally. And I'll buy the Aussie and the Kiwi. Then there's nothing that would be like, and let's just hope that doesn't happen,
Yeah.
because that would be it'd be sad. I mean, but that changes my view of the Australian and New Zealand dollar immediately. So, okay, continuing on. Do I think it's going to happen? If you're really asking, I sure as hope not. But I think those are risks, right? I mean, it's kind of like Katrina, but on a way bigger scale, you know. Here's the Canadian, and the dollar Canadian. I traded this really poorly at the end of last week. I gave away way more profits than I wanted to. If you guys don't recall how I traded this, I was long through here, a pretty sizable position, on this inverted head and shoulder pattern. I took some off, when we were near 134. I took some off. I started adding it back here, like down in these levels, around 133. Everything was looking great last Tuesday as we walked away from the negotiations. And then, I was out at my son's soccer practice. Trump wants to get back into the negotiations because obviously stocks were severely hit on Tuesday. So then, fortunately, I sold a little bit of my dollar Canadian position that I had added on. I sold it, and then I got stopped out of the remainder down here. I should have just taken everything off here. If I would have taken everything off when that tweet came out Tuesday night, so been early Wednesday morning for you guys in Europe. If I would have taken just everything off, my week would have been extremely profitable. But instead, it's like, more of spinning my wheels, and it's a shame because I had such a big sizable position for that. But what I'm looking at now is, I'm surprised that the Canadians, as weak as it is trading really heavy, and it's like the exact opposite it was last or 2 weeks ago. Back here, I mean, you couldn't get enough dollar Canadian longs back here. So now it's just like extremely heavy. I would be watching the 131 level. There's got to be stops residing below 131 now. So just, be advised. I'm going to keep it in range because really, I mean, we're in a big range, and also, taking a longer term view of the dollar Canadian. Here's the channel. We're outside of the channel, so even dips back down here should find support. But the doesn't mean we can't go down there, and that's one thing you got to be aware of. So resistance, to take some of this downside pressure off, we actually have to get above here, which is 131.60. Okay, let's go over to the dollar mex. Dollar mex is trading heavy too. We're on this this broken trend line here, and it depends on how you draw it. I mean, if you're going right through the highs here, we're already back below it. But if you go to some of these other tops through here, right there, right here, I mean, this is support. So I'm going to write down today 2110. But and I'm not trading this. Hey Dale, go ahead and bolt off for a few minutes. I'm still finishing here. So go
Okay,
ahead.
buddy.
All right, man.
Thank you. Thank you,
Yep.
bro.
I'm gonna the dollar Mexican peso, I'm not trading it right now. And I don't know where even rare resistance is right now. I mean, I guess it's gonna be this previous support. We got some of these spike levels up here. I mean, it's 2150, so that makes sense to me. It's not great resistance. Oops. Okay, guys, I'm trying to get this done so I can give Steve and Stelios a lot of time to talk about nothing. So laugh now until you've got to fill up 30 minutes of talking about nothing. You can laugh all you want. I used to laugh like when I used to do. Remember, I did these webinars for 2 hours a day for the Wise Trade and MB Trading and Ally Financial traders for years, and I would do 4 hours of webinars a day, 2 hours during the lunch and 2 hours in the morning, and it was like days like today, it's like trying to tap dance. It's like, dance, monkey. Dance. Find something funny to say. Woo! Come on, monkey. Dance. That's how I felt. Dollar Swiss. So, range bound. I mean, what I can do is I'll write. Well, I don't even know if that's that. I mean, this isn't even great support. So, 90.60, 91.35. Nothing to do. US dollar, Norwegian krona. Now, we broke back below this support. I was getting close to buying some US dollar, Norwegian krona last week. But we're at right now the 50% retracement. Further support is going to be down here at 9.02. One thing I got to point out about the US dollar, Norwegian krona is actually it's not holding up bad. But we could see, some downside pressure. So resistance right now is 9.25. Support will be 902. I'm going to leave it at that. We'll leave it in range. Dollar yen. This one, I was long dollar yen on Friday, I think, if I remember correctly. I was long as we were up here, and then it looked like to me, basically, it looked like we're going to break through the support, and I took it off, and I barely lost any money. Actually, matter of fact, I got out of like half of my position while we were in this triangle, so it was a very, very minimal loss. But when we slipped back below this 105.80, that was kind of a warning. Obviously, that what's really going to be key here is going to be this resistance, which is this trend line that comes in at 106.20. And support now and we are still in a range. Support's going to be down here at 105. Equities continue to move higher. We're actually at resistance. We just broke through resistance in the S&P. You guys, unless you're a Forex Analytics subscriber, you didn't get notified. But as a Forex Analytics subscriber, that there's alarms are and are being triggered right now. So what am I missing here for currencies? Dollar index. Let's go over to the dollar index really quick. $618 is 92.90. Trend line resistance here. And since we broke back below this neckline, I'm going to remove it. So that just keeps us, we're in range bound now. I'm going to write down 935. 92, was it 92.35? 93.35. And 92.90. I think. Yeah, it's 618. So 92.90. Okay, let's do gold in the S&P really quick. Here's the S&P. So we're at the 78% retracement. So that's 35.10. And then support will be back at 34.45. And gold. And guys, remember, it is a holiday in the US today. So if you're like, oh man, it's just so slow, or things are just kind of grinding around, remember, it is a bank holiday. So liquidity is going to be a little poor today. Here's gold. See all this previous support through here. $19.40 and support is at $19.20 or $19.18, $19.40. And look at this. Ranges galore. Isn't that pretty? It's not. For us traders, this is not great, but it is what we're seeing today. So we have to deal with it. All right. Guys.
Why are you waking us up?
Welcome to the jungle. Huh?
You waking me up.
No, it's, hey, you know what? I'm going to pass it over to you guys. Dance, monkey. Go ahead. Dance.
Put a quarter in, man.
Yeah, no, seriously, hopefully you guys can, since there's three of you.
You're referring to the song, I guess.
Yeah, you guys can go have some fun conversations about
cars.
Whatever. Yeah. Yes, cars. But good luck, everybody. Let's pray for some volatility as we head into this election and into Brexit negotiations. And matter of fact, maybe you guys can start off by talking about that. Huh? Dance, monkey. All right, I'll see you guys later.
Thank you.
Bye-bye, mate.
Thank you.
Bye, guys. Good luck today. Happy Monday, by the way.
You too.
You too. Okay, so it's been a very quiet morning, like Blake said. We do have a couple of little things to discuss, maybe. The first one is, like Blake said, Brexit. We had, first of all, it's an important week because there is supposed to be talks between UK and EU in Brussels today, and I think tomorrow as well. And also, people remember, Boris Johnson, about a week or two ago, said, look, we have until mid-October to make a decision because it takes some time to ratify it, etc. So this is
we are
theoretically the week. And we've been talking about Brexit for a while now. Hopefully we'll stop talking about it in a few weeks. But what remains is that the market is effectively, arguably, pricing a 50-50 chance of a deal or no deal, whichever way you see it. I know people are going to argue, no, I think it's more a higher chance of a no deal, a higher chance of a deal. I think 50-50 probably about right. So either way, the pound is going to move.
Very nice potential for a move either way. Yes.
Exactly. So we've said this so many times. I think, Blake compared this to the stimulus talks in the US. I think the stimulus talks have a very, very high chance of happening. But obviously Brexit is a lower chance. But I still think we're going to see both happening. And, what kind of a deal is it going to be? I don't know, and I don't care. As long as uncertainty gets removed, I think the pound is eventually going to do well. Will we get 92 and above in euro pound for me to short? Maybe not. Maybe I'll miss this, but that's where I'm looking at 92, 93-ish. The other thing that we need to mention in terms of the UK is that the Bank of England, people will remember they talked about the possibility of negative interest rates a week ago. They apparently sent letters to the main banks saying, you have to be prepared for the possibility of negative interest rates, and you have to make sure that you are, your systems, your readiness is basically 100% because it might happen. So that I would have expected it to affect the pound. It hasn't really today, but then again, it's a very quiet day overall. But the bottom line is they are considering it, and they've said it publicly, and it's no longer a rumor or something. They have said it. So
yeah, saying they're considering it most probably means that they've already decided.
Yeah, it's a step closer. It's a step closer. And I tell you what, if there is no Brexit deal, obviously they're going to do it. They're going to
instantly. Yeah,
they're going to go QE more because that's all they know how to do or what to do. So
yeah, especially now that interest rates are more or less stuck at least they're actually stuck at negative. If we're not talking about nominal and we're talking about real, they're stuck at negative. Yeah, there's only asset purchases left.
Yes. And what else is there left for them to buy? They're going to be buying all of their own bonds. They're going to start buying corporate bonds like some central banks are. Maybe equity ETFs like the Bank of Japan. Hey, let's buy everything. So this, I don't know if they get it, but it's not really helping the average person, or let's say the bottom 50%. It's not really helping at all. It's actually hurting them. But, they live in their little crystal castles high above the clouds, and they have their own way of thinking. Anyway, enough of that. What else is there? We have the usual Trump-Pelosi duel, where apparently Trump is now trying to get some kind of a deal done, but Pelosi is rejecting it, and etc., etc., etc. So I'm not even looking at that anymore. I'm not reading about it because really it's the same stuff written all over again. Until there is something firm, I just stay away. And that helps my sanity. Let's put it that way.
Very true.
And apart from that, it's been very quiet. Let's have a look. Data. Do we have anything data? No, we didn't. Do we care? No. No Japanese. No, nothing. We've had nothing.
Not that the market really cares about data anyhow.
Yeah, you said that, but very, very little. That's it. I'm struggling. You have 16 minutes, Steve. Find something to say.
Yeah, not gonna be that tough. S&P. I'll start from the indices. The indices are clearly doing, well. If we go down to the 4-hour chart, for me, it's very indicative. This channel, the breakout through this channel is very important because in essence, it confirms what I was assuming, that this was an impulsive move higher with most likely, let me find it, where it is. Yeah, here it is. So with what is likely another sequence.
Oh, these are 1-2s, Steve? Oh,
no,
okay.
That's a 3, most likely here. You know what I mean?
Yeah.
So, I think we're headed higher. I think that the market more or less realizes the obvious. There is going to be more stimulus coming one way or the other. We're now 1 month away from elections. I don't know if there's going to be a deal pre-election time, but don't forget that the market doesn't actually care if some of the people that have a need for it will get their stimulus check on time or whatever. The market mostly cares about the, huge incoming monetization. We know that the Republicans started from 1 trillion and they're already up closer to 2. I think one way or another we're going to get at least a couple of trillion, and the market realizes that. And 2 trillion or 2 trillion plus is a very, very nice amount to get the market going for a little bit longer. So we've talked about the Fed's balance sheet that's stuck for a few months now at 7 trillion, and that's like just a consolidation. I would expect that consolidation to break out, and I would expect that within the next 3 months, the Fed's balance sheet is going to be closer to 9. I would guess at least like 8.5. And the market knows that, and the market likes that, and the market only trades based on that. We know that. The market doesn't really care if the economy is in rumbles. The market doesn't really care if the debt is exponentially increasing, if deficits are spiraling out of control, if trade balance is just the worst it has ever been, or the second worst it has ever been. The market cares about none of that. The market, for the time being, until it starts caring about the rest, cares about stimulus. So the market has no reason not to keep pushing higher, and I do think there is a very, very good chance that we are going to see new all-time highs rather soon. Now, within that context, we've seen a recovery in the metals, but admittedly, not in part to what we've seen with the indices. So having to do with the metals, I think both of them are at quite an interesting juncture, because you can see that both of them are currently testing. Here is silver and here is gold. So both of them are currently testing trend line resistance from this channel that they've been riding to the upside. So for me, this is decision time for the metals. Do we have one more low to go, or was that it and we've already found the low? I think we're this channel will tell us all we need to know about it.
Nice luck.
Now, having to do with natural gas, if you remember, Dale, I was expecting that this was some type of a bull flag that that would break higher. We've already seen two very, very strong
Nice
days
call.
higher, and now guess what? We're testing 290. And my prediction was and remains actually that this time there is a very, very good chance that 290 is not going to hold. In which case, I would expect a big, big squeeze higher.
390.
Let's zoom out and I'll. I shouldn't have done that. I would say 325 is the first natural target.
Okay.
373. Yeah, 370 to 370 something. Then we have 390. Yes. So these are potential upside targets, but I do think that natural gas has more to go to the upside, and I think that the market is not properly positioned for this, and that should exacerbate whatever move we see. Platinum, palladium, both of them looking quite healthy. Palladium even more so. I think palladium above 2,500 will squeeze even further. Platinum still kind of underperforms other metals, but still I don't see this move lower as anything else than corrective for the time being. So even in the case of platinum, I do think that the general outlook is constructive, more constructive than anything else. Now, I've said my opinion since some time ago. I still see people that believe there is more dollar strength coming. I think the chances are against that. I think that this corrective channel higher has already run its course most likely. We had a clear breakdown on Friday. I mean, not only we broke down, but we actually closed near the lows. And I think that's quite telling. 92.50 is the next area of support. So perhaps the bulls can, try to make a last stand at 92.50. But in all actuality, I don't see any strong reason why that should hold. So until proven otherwise, my dollar bearish bias, remains as was actually.
Does 90 action above 94 change it if we should get back above that level?
Yeah, I think that 94 is a key level, even if we go back to it. And yes, I totally think that if the Bulls want to put a fight and prove that they mean it, you know what I mean?
Yeah.
They need to manage to take the DXY above 94 once again. As long as we trade below 94, technically speaking, personally, of course, there can always be the case that somebody has tunnel vision or whatever. But I think objectively speaking, I don't see any technical arguments for being long the DXY as long as we stay below 94. So below 94, having a bearish bias, I think makes a lot of sense, the least I could say. Now let me go through some of your questions. What about Boeing? Yeah, let's have a look at the rest, and if we have time, we'll have a look at the Boeing. There are questions actually about some of the exotics, USD, Russian ruble. Listen, I've said since the beginning of the year that I consider being long ruble a very nice long-term position. Somebody can claim here that this is a huge cup and handle formation, and technically speaking, that's the case. So above 83, we can see like a massive move to the upside, right? Something like that. Personally, I very much doubt that the ruble can move to 110, not for any other reason, but actually the Russian economy is actually a lot healthier than a lot of the what we consider other developed economies. Don't forget that there is a very nice carry being long the ruble, and I do think that there is a good chance that this is going to be a very nice short position, being short the USD ruble. I'm paying attention to this ascending channel. You can see it here. So no technical argument to be short as long as this channel is holding. But if and when this channel breaks to the downside, I think that's going to be a nice opportunity to be short.
Peter
So
Goodburn agrees with you.
Oh, that
Well, he's pretty good.
That makes me feel even better, actually.
Yeah, I mean, you wouldn't believe his objectives in a few years once a dollar bear gets going in earnest.
In USD ruble.
Yeah, how about back to 2020 lows?
To 2020 lows.
Yeah.
Personally, I think that ruble can go below 40 in the years ahead.
All right, I like it too.
Yeah. So
no one's, how many people are talking about being long the ruble, or as you say, the rubble?
Yeah, I have no idea, but I honestly don't care because I know why I like that position, and fundamentally, it's extremely sound, and it also pays you. It pays you good.
Like, give us an example what the carry pays.
Haven't checked recently. We used to trade it a lot with forwards, but it used to pay way above 10% when volatility was high. I have to check again. I haven't taken a position in the ruble for years, actually, but I'm actually looking to take one, and it's going to be a long-term one. That's why I'm going to trade it through forwards as well. That's why the same type of position I got in USD NOK. USD NOK actually. I think I mentioned it here on the webinar. I added on this rebound. What was it, like 10 days ago? So I now have 2/3 of a position. I'm very deep in the money, and I think this is a very long-term position that will, pay highly because I think that the Norwegian economy is much healthier than the US economy, as simple as that. Same thing with the Russian economy. It's in a much healthier state. Russia has something like 20% debt to GDP. And I know, a lot of people will claim that debt doesn't matter, but trust me, it's going to matter again because it actually does matter. So yeah, I definitely like that position. Now, there is a question about the VIX, which is actually a good question, because the VIX is, if I remember right, it should be testing support now. Yes, it is.
24-ish.
Yeah, we were talking even a couple of weeks ago about this range that the VIX has created now between like 30, 31 and like 24, high 24s, 25. We got rejected last week from resistance. We're now testing support. So, worth paying attention to the VIX here. But as I've said before, I don't want to be short any of the indices at the moment because you currently just 1 month away from the elections, not even 1 month away from the elections, you're trying to fight both the Fed and the US government. I don't want to do that. I find no reason why I would be doing this. So no, thank you. I'm not going to be doing it. So, I mean, can the S&P pull back? Absolutely, it can. It can do something like this. Back test 3,400 and move higher from there. So yes, I mean, look at this. If you count this is a 4-hour chart, right? In this 4-hour chart, the last 20 of the 22 candles are white, meaning, we've moved higher in the last 20 out of the 22 4-hour periods. So is it overdone in the short term? Yeah, of course it is. It absolutely is. But, do I want to like short it looking for, I don't know, like 30, 40 handles against whatever is coming afterwards? No, I don't. So, somebody else can do it, but I'm not looking to do it. In any case, if for some reason we see a pullback, I think that 3,400 to 3,410 is actually going to be a great area of support, and I'm pretty sure that a lot of people are going to step in buying that dip. Somebody else is asking about the DAX. Listen, the DAX pullback might be over as well. There is a very good chance about it. I can tell you that the only bearish argument that somebody can make here is that we're backtesting this broken wedge trend line support as resistance. Now, I'm not very sure this is actually going to end up working out, right? But we might see an initial rejection from here. It's also like the 61.8 of this move lower, etc. So who knows? We might get one more leg lower for the DAX. If we do get a pullback, as we said, to 3,400 in the S&P, for example, the DAX might exacerbate that move and actually post a lower low, like going lower from 12,330, which was the previous low, temporarily. So yeah, that might actually be the case. But in all actuality, as I said, I don't want to be short risk at the moment. And if you want to be short here, at least you have a very tight. You can have a very tight stop loss, so the risk reward is quite appealing. So I can't object to that. Now the FTSE is a different story because the FTSE has clearly, severely underperformed the rest of the indices. You can see it here, right? Severely. And one of the main reasons for that is the fact that actually two reasons for that. One is the currency that has, maintained strength more or less. The other reason, the most important one, is the Brexit uncertainty. I don't see this move lower, though, having any type of impulsive characteristic. So technically speaking, clearly technically speaking, it looks to me like the FTSE will eventually break out from here and will have a lot of catch up to do. So I have to tell you that it doesn't look like a bad idea to me for somebody to buy a breakout from like, what is it, 6,100 and let's call it 50 to round it up for a move higher, which might even prove to be very sharp if we get some positive Brexit news, right? Because the market will then have to unprice a lot of negativity and start pricing in positive stuff, and that should produce a very decent move. Okay, I heard the guitar Dale. So who do we have
What
today?
chord? What chord was that
No
that I
idea.
played? All right, an E or a G. We have Kathy Donnelly.
Okay.
And we do a lot of things. A lot of our stuff is short term. You do some good long term stuff, but Kathy has written a book that has co-authored a book that has gotten rave reviews from guys like Peter Brandt. Even Schwager commented. I went to her website, and it's
What's the
called the
title?
Life Cycle Trade.
Okay.
And she does a lot with IPOs and talks about the whole, as it says, life cycle of that issue. So should be interesting. And you can't do everything short term. Wealth is built long term, isn't it?
Yeah,
Usually.
if she specializes in IPOs, that means that her specialty during the past few years have made her more or less an expert on Ponzi schemes as well. I'm curious to.
All right. Well, all right. We'll address that. So, Kathy, welcome to Face, and there are some U.S. bears around here, so I'm going to get you set up, promote you to panelist, and I'm excited to talk to you. There you are, and welcome to Face, Kathy. Waiting to
Can you hear me?
Got you now, Kathy. Welcome.
Hi, thanks for
Hi.
having me.
Oh, it's a pleasure to meet you. Thank you so much for taking time out of your day before the open. And were you going to show us anything where you would need to share your screen?
I absolutely can. I'm prepared to do so if you'd like me to.
Sure. So have you used Zoom before? There's a green box that says share screen on the drop-down menu. There you go.
Okay, great.
All right.
Well,
so, all right,
Again.
Kathy. So, like I was saying in the intro, we do, for us, the life cycle of a trade can be 10 minutes. Long term is a month in highly leveraged currency trading. And, I learned later in life that wealth building is built not just with short-term trading, but you have to have some long-term ideas. And it's great when you're making money in your short-term trading account, but it's great to pull money out of that account and go into something that you could hold for a while that offers growth potential, like the growth stocks. So this isn't exactly my wheelhouse, so I'm looking forward to learning from you. So why don't you just take it away, and I'll interject when I have a question or our.
Okay, great. Well, can you see my screen?
Yeah, we have GSX. We have all of those symbols up. Best performing IPOs of 2019 to 2020.
Great. Well, yeah, I wanted to share just what some of the top performing IPOs are from 2019 to 2020. And what's really interesting about this is that really these top 10 stocks that I have listed here are actually all IPO'd in 2019. And you can see the gains here range from 800% plus to 242%, and this is from the day one closing price. And what you were talking about the short term and the long term aspect. So this is really talking about the long term aspect. Especially if you're a person who doesn't want a short term trade, even though you're excited about a new initial public offering coming out, really the gains to be made on IPOs, in my opinion, and based on the research, the more lucrative returns come later. And so these stocks I'm showing here IPO'd in 2019, but they really didn't start their run until later, maybe 6 months to a year later. And so really, even though we ran the data from 2019 to 2020, these are the top stocks from 2019 IPOs. You would think
Okay.
that's all I'm showing, but I'm not. Does that make
Okay.
sense?
Yeah, and I have a question, and I've always felt that it really wasn't fair to the general investing public that they don't get the allocation before the first day of trading, and the people that get in and get allocated shares on most opening days are offered tremendous gains to sell into the public on day one.
Yes.
So
Yes,
what's your view
exactly.
on how IPOs are allocated by whoever the broker is that's sponsoring the IPO?
Well, I agree with you, everything that you just said. And that is actually exactly why when we were running our numbers and calculating the data to find out, how these IPOs really perform, we did it from the day one closing price, because the retail investor, that's usually when they can get into it. They don't have the special agreements, or they can get in on it early, and then we're the
Right.
ones trying to get in and they're the ones selling, which and that's where we came up with the institutional due diligence phase, and I'll show that in a second. And that's when they're really trying to find out if they want to hold on to it or buy it back after getting that initial purchase beforehand, and then selling to the retail public.
Okay, and I'm also interested that I've seen many of them come public with 100% gains, and maybe even going back to things like Twitter and Facebook, and I'm so old I remember Google, and where the IPOs would come out, and then you'd have to live through a period of price depreciation that occurs, and there have been some pretty deep corrections from maybe day 10 or day 3 after the IPO on some of these issues. And how, to me, a lot of what we do is the art of when, the timing.
Right.
All right. So, I mean, you've probably noticed that same thing too, right? Where, they come public and then, I've seen them drop 30, 40%. How do you navigate that?
Yeah, well, I jumped ahead here to one of
Okay.
the patterns that we identified that I wanted to show you, and specifically the pump and dump pattern, we call it. And this actually is a line chart of Facebook. And I'm
Oh,
sure you
okay.
definitely remember Facebook. And this is the
Yeah.
perfect example of, tons of fanfare. Everybody's gonna want to get into Facebook. And then what happened? Went down the first day, went down the second day, the third day, so on. And it just created, you see this, the dotted line there,
Right.
here was that first day price there. And
Right.
it just, all it did was go down. I mean, it didn't know how to make money. Nobody knew if it was going to be able to make money. And so this is that institutional due diligence phase I was talking about. So all those people you were speaking of earlier that were able to get in before the retail investor, they were all just selling their shares, right? And then
Right.
people like us who don't know better are buying it, and then unfortunately they're seeing these losses, really. I mean, and Lyft actually did something similar, I remember, because we were comparing even Lyft to Facebook at similar pump and dump pattern. And so this period right here is where, can be 6 months, a year, 2, 3 years, maybe even up to 8 years. And then at that point, you're really not even thinking of it as an IPO anymore. But this is where you want to watch it. You don't want to take them off your radar. Facebook, really, this big catapult right here was when they first said, okay, yeah, now we know how to make money. And then everybody was getting into it there. And this is what you want to watch for those big gap ups to happen. They're coming back to where they originally IPO'd, and they're hopefully creating a base of some sort that we can buy from. And in Facebook's case, they had this big gap up, and really there was a short opportunity to get in there. And then, now it's a slower mover, but it's been a good stock if you were able to get into it and keeping your eye out when it transitioned from the institutional due diligence phase to the institutional advance phase.
Okay.
Does that make sense?
Yeah. So when would you if you didn't buy it, you just wait for, it's kind of like a breakout with the market taking out the IPO price level. Is that what you wait for to enter it, or do you take advantage of after the pump and dump to buy it cheaper than the initial IPO if that opportunity presents itself?
I think a really great way to watch some of these is to kind of do what I've done here is draw a long-term trend line, especially on a stock that, if you've been watching the story and like Facebook, was trying to figure out how to become profitable. And when that trend line changes, if you didn't want to wait for a base, this could be a first opportunity to get in there. And I use MarketSmith's charts, which I know is different from what you guys use, but let's just go back and look at it really quick. Since I've got let's see, when was that? 2012, so we'll put in 2013. So here you can see it even better because it's not a line chart. This is a weekly chart, and you see we have that similar pump and dump pattern here. And here's where you see the character change. And this is the 40-week line, this black line right here. So that's about, what, a little over 6 months or so here. And, it's starting to come back up. We think maybe it's going to start working. And then here's where it creates that first, what we can call a first mature base. MarketSmith calls it a consolidation, but regardless, it's a base of some sort. You have a prior run up, it's finished its bottom, and it didn't go undercut it again. And then here's that gap up I spoke of. So in this case, now that we're looking at it in more detail, you actually do see here's a base. You could wait and buy it at this prior high, or if you were watching it, you saw a character change and you were drawing your trend lines, maybe you were getting in right here. But this was a big gap up on that day. So you would have had to.
Was it earnings?
It was earnings, I believe. Yes, it doesn't show it on here, but I'm pretty sure it was an earnings gap up. Yes.
Okay, and what's your risk management on this? Say, for example, give us an example. Maybe this was an example of where you buy it. Do you have like a percentage risk factor of, I'll risk 10%, 20% on a position, or is it technical for where you say, you know what, this isn't working, something else is going on that I didn't anticipate. I need to get out of the way because, there's nothing wrong with being wrong, but I've experienced there is something wrong with staying wrong.
Yeah, exactly.
Have you ever noticed it? I mean, we're all wrong, but if you cut the cord, the difference between pros and amateurs are pros know how to lose, so they have money left to be right with. So how do you manage your risk on positions like this?
Well, my pedigree is How to Make Money in Stocks by William O'Neill. So
IBD.
Yes, IBD, Investors Business Daily, absolutely. That's really where I started my growth vesting stock personality.
He really helped a lot of people because part of my work is diagnosing the relative strength of currency pairs against each other and relative weakness, and knowing that your preferred long should be things with good relative strength and avoid relative weakness. So IBD did a lot to advance the trading community.
Yeah, absolutely. So
is it still
what
published?
Bill taught, oh, sorry, go ahead.
Is it still published?
Oh, yeah, yes.
Oh, okay, all right.
Absolutely.
Okay.
Yeah,
so you learned Bill O'Neill was like a mentor to you.
Yes, he was. And when I found his system and it clicked with me, I went to see him at every seminar I could. So now he's retired, so I don't get to hear him speak as often, but I still follow him. His book is still my original stock market investing Bible, I guess you could say.
Yeah, one of my contemporaries, Andre, is saying that Snap had a similar price behavior after the IPO, that it went through high price and then a dump before it turned good.
Yeah, Snap is a really interesting one to watch, and this is like an older one, right? So 2017. I mean, not that old, but
Right. Looks
but
like a
yeah,
head
this
and
is one I've
shoulders.
been. Yeah, this is one I've been watching. So here was that day, week one, and so what we would call this is the turbulence zone. So believe it or not, later it's actually getting close to maybe taking out that original high that it made. Now here was a gap up, looks like it was on earnings,
Yeah.
but it wasn't sustainable. It undercut its previous, not this low it had already undercut, but this low again. And then there was some news, I think, that was changing it, but then here we had the bear market, and now it's coming back again. So yeah, this one, and RS line, we're talking about relative strength. I mean, it's almost
90.
a new highs, at least from here, but
Yeah,
it has
pretty
potential.
powerful. Let me ask you on this, how did people who bought at the IPO survive a drawdown like this, almost 70, 80%? And when were you, did you participate in this issue, or are you considering it now that it's almost at that price level?
Well, to be honest with you, I have a position in it right now.
Okay. You know
So
what
I
I
am.
would, go ahead, Kathy.
Well, I
I
was just going to say, I'm trying it here. At this is a IBD. Market Smith is calling this a cup with handle base. So I'm trying it in this base.
Okay.
I like that it is coming back to all-time highs. It still doesn't really have earnings, which I wish it did, but it does have sales, and there's some news and the TikTok and the back and forth with that. So I think it's interesting. And I'm just curious if it's gonna blast through. I think it's either not going to, of course, or it is. And if it can get through here, then I think it's got a good run in it potentially.
Okay.
But we were talking about the risk management earlier, and so the Bill O'Neill 7 to 8% loss is what I follow. And
Okay.
this is a mature stock. It's very liquid. $20 million daily, 50-day average volume times the price. So we've got definitely a lot of liquidity there. So I would treat this a normal position size, which for me would be starting around 12.5%. And then I've got the 7 to 8% stop from my purchase point.
Okay. I'm noticing here from the IPO to the low was about 9 months. Have you done any kind of back testing or studies on how long after the IPO they go through this phase before they're, is it 3 months, or is just different with every issue? Is there an average amount of time that you find yourself, like on the opening day, you don't go and you're waiting for that due diligence phase? Is there an average time frame for how long that takes after something goes public?
So what we did study is that most will undercut that day one close within 3 weeks. More than half of them will do that. And then 91% of them, so pretty much almost all IPOs will undercut within 2 years. So we do know within a 2-year span, it could still keep going even lower. What we haven't quantified, but I've observed a lot, and I was saying it with the 6 months. Within 6 months, I think it's like the earliest it can come out of it. And usually it's right around where you see that 40-week line. And I like to really start paying attention to that. So like at the beginning of this year, and I mentioned this earlier too, I was really looking at, well, what are the IPOs of 2019 that now are setting up for 2020? And when 2021, as we get closer to next year, believe it or not, 2021, I can't even believe it, right?
Yeah.
I'm going to be looking at the 2020 IPOs and which ones are going to be setting up.
Okay.
Yeah.
And how long have you been doing this? When did you start doing this IPO type investing?
Well,
started
this IPO study about 4 years ago, I believe. So 2016, it's just me and and my other co-authors, Eve
Okay.
Lobach, Eric Kroll, and Kurt Dale. Yeah, we met through an IBD meetup years ago, back in 2006, and just, stayed friends, colleagues. And then we were just like, is there a way we can figure out which are the top? I mean, there's got to be a way,
Yeah.
So we just kind of embarked on a study. We took our time at first, and then we said, we got to finish this. And then next thing you know, we thought we had enough information that we wanted to share it with others.
Okay, well, I would say in general, that time frame has been during a prolific bull market. And I'm wondering if you've done any studies. It's been such a long time, I don't even know if they exist, and this isn't a forecast, but what do you do in case we do enter at least a bear market? I know we had that COVID crash, but if you just closed your eyes for a month, the market didn't do anything. It was back to where we were in a few months. So will there be less inventory during bear markets of IPOs? And how do you know when you're entering a bear market? Maybe IPOs could be some type of lead indicator for, I know that when there's like a lot of froth and a lot of IPOs and supply hitting the market, that's a sign of kind of euphoria. So I'm wondering if you do anything with sentiment of the general market in relation to IPOs.
Yeah, that's a great question. We didn't study it specifically, but I think you can definitely see a correlation. When the market's bad, you're not seeing any IPOs coming out. In fact, my co-author Eric Kroll did an interview earlier this year where he was like, the IPO market is cold because no IPOs don't want to come out in a bad market. And now, since we've had this great rally, now we're seeing IPOs left and right. So there's absolutely a correlation. And I think what's
Okay.
also interesting, what we noticed is, one of the IPOs we studied for this book was Acacia, ACIA, which probably finally might not be has closed since it was, I forget who it was merging with now off the top of my head, but that was one that came out when the market was like really bad. And it was like the first IPO that actually had earnings and sales. And it was like, oh, finally something. So I think if there's a bad market and we see an IPO like that, then that's something to look for sure. But definitely I think if the market's bad, you're not going to see IPOs, and if the market's good, then everyone's going to try and get out. And then that's when you really have to be picky.
What about new companies going to a listed offering rather than an IPO? Is that competition for the IPO market?
Are you talking about the SPACs?
I don't know if there's SPACs. Maybe it is SPACs, but there
Or
was
the
another
direct
way.
listing?
Direct listing, yes.
Yeah. So, that's really interesting. I mean, Spotify, we thought maybe would be one to watch. And it is one to watch. I mean, let's pull it up really quick. I mean, we were really watching this because we thought, okay, well, this is going to be direct listing. Maybe it's not going to have the issues some other IPOs have, but really it hasn't acted much differently. It had a little bit of a run up. This one we call the late bloomer, but then it just had this really long institutional due diligence phase. It's finally powered through its turbulence, but now it's kind of choppy again. So haven't really seen anything specific that direct listing gives you any more of an advantage at this point.
Okay. And I want to take one question. She's been persistent. Jane would like to know, are there any cannabis stocks that you participated in IPOs and they had dramatic runs initially and have all really sold off over the last year or so? Anything in that sector that you like?
Which sector?
Cannabis.
Oh, cannabis.
Yes,
Okay,
cannabis.
sorry, I missed that
It's
part.
all right. Put your ball. You're a triathlete, so I know you're not indulgent. So anyway, any
That's
of those
funny.
any of those issues that are interesting to you after this big pullback?
Well, Tilray is a good one to look at because it had a huge run in
Wow.
here, and I did participate in this. So I was using fast rules. We talk about in the book that if you're buying from IPO base, you've got to use fast rules in that, it's not going to be, it's going to be short-lived. So you want to be able to get in and get out. And of course, it does not, this is just,
Yeah, people
well,
became millionaires on moves like that.
so, but I did participate in this. And when the way I like to play this is, if I'm buying it from the IPO base, and if I'm lucky enough, the stock's lucky enough to have a run like this, usually what I've observed, by the time it breaks this red line, which is the 10-week line, it's pretty much done until it finishes its institutional due diligence phase. So I was definitely selling it somewhere in here. I didn't get this crazy day. This was the day or the week that they even had to stop the trading. I think they were interviewing the CEO, and it was just going crazy that they halted the trading on this week.
Yeah.
And then you had a few more here volatile days, and then for sure,
What a bubble.
After it broke this line.
Pop goes the bubble up there when they halted it.
Yeah.
Kathy, for people that would have an interest, perhaps you could show your website and how they could get your book and
Yeah,
begin
absolutely.
to learn
I would
about
love
this.
to.
Because
I would love to. So we have a website. It's the Life Cycle Trade.
Okay.
And if you just scroll down, of course, buy now, if you're interested in purchasing the book, it's available on Amazon, and then a little short bio about all the authors here. And then
Look at those reviews. I've interviewed Jack a few times. So if you
yeah,
have
I'm really
Jack's
looking
name
forward
on
to
it,
his new book.
yeah, maybe they're not going to be unknown anymore.
That's
the unknown
right.
market wizards, I told them, but great endorsements, Peter Brandt. So I encourage everyone who wants to diversify from short-term spec trading to, this is kind of a little bit on the spec side. It's not traditional to buy things like this, but it's good for people that aren't risk averse to be looking at things that, God, there's been a lot of home run balls out there during this bull market. So may as well go with learning from Kathy.
Yeah,
Is my opinion.
Well, at the bottom of our website too, we have all the interviews that we've done. So of course, this one will be included in here as well. So if you're interested in learning more about us and our story, and we've listed some of the stocks that we've talked about, it's all right here. So yeah, thank you so much.
It was really great meeting you, Kathy. And, I wish you continued good fortune and your readers and subscribers. I wish you, the greatest success in your business and in your own account. I'm rooting for you.
Thank you so much. I really appreciate it. This is a pleasure and an honor.
Kathy Donnelly, everyone, and you could find her on Twitter as well. Her Twitter handle is at KGD_investor. Thanks, Kathy.
Thank you.
All right. Good hunting. You know what? You survived an interview with me. You know what that makes you?
I don't know.
My trading warrior sister.
Oh, I love it. Perfect.
All right, Kathy. Have a good one. And thank you for taking time today. All right. Bye-bye.
Oh, of course. Thank you.
All right, everyone. That's a wrap. See everyone for Turnaround Tuesday. You're very welcome, everyone. I'll see you. Don't just count your pips or IPOs, count your blessings. We'll see you tomorrow.